Is there a sector in particular that you want to focus on?
Well, I like the market in general. I'm an optimistic opportunist, and right now the financials have been leading the way. The XLF is up 20% since the lows in November, so I'm looking for that trend to continue. I've got two themes here. Momentum, because we've been on this strong track here, been trading between 16 and 14 for essentially last year, broke out, and now we've moved to that 18 target in the near term. Looking for that to continue with Wells Fargo and JP Morgan coming out with earnings this week. And we have more money, with more money coming in the marketplace all the time. Banks are able to borrow at zero and buy treasuries at 3%. So it's free money for banks, and I don't see that ending anytime soon.
So Alan loves the XLF. That's the financial sector ETF. He likes the bullish side of things, but Mr. Voorhees, you're not quite as convinced about the prospects for those financials, are you?
No, I'm not quite as convinced as Mr. Knuckman. And I will hear about this, I don't disagree with Alan that in the long term, the outlook may be bright for the XLF. In the short term, I think it is a little bit more bearish. Recently we've seen some softer than expected economic data. The market shrugged that off. Then with last week's jobs number, we really saw the market react poorly. So I think that's going to continue. I think earnings are going to be really telling. We see JP Morgan and Wells Fargo this Friday. Then next week we have Bank of America and Citigroup. Citigroup on Monday, Bank of America on Wednesday. Both of those released some less than positive news recently. Bank of America, Moynihan called that emergency meeting to discuss the third straight year of declining revenue, whereas Citigroup last month announced that $700 million settlement.
So that's the bearish
old
case.
News. Look at the price action.
But that's fine, Alan. But so let's just say that he's wrong, right? How exactly do you go about doing this in the options market? Because it sounds to me like you're bullish. You want to be in call options, let's say. How exactly do you play it out?
Well, there's low volatility, and that's also a telling sign. You were talking about the VIX put-to-call ratios at the highest since 2010. Well, guess what? The market's up 40% since that time. So that was a contrarian signal as well, that everybody is all of a sudden has all this fear. I can play this with the January of 2015 in-the-money call, a 16 call, and again, that was the breakout area. A 16 call is going to cost about $280, and it's got a year and 9 months for price development, with a break-even less than $1 away, again, with a year and 9 months for good things to happen and bullish development.
So a bullish trade there longer term. You're talking 2015, but this is not the case overall. I mean, John, what do you think? You're bearish on this, right? What's your trade?
Yeah, I am. I'm looking for a trade that will provide some short-term speculation to the downside or a hedge against a longer-term bullish position. So what I'm looking at is the May 18-17 XLF put spread. I can buy that for around 25 cents, so for a risk of $25 per one lot, with a potential reward of up to $75 per one lot. I get a good 3-to-1 risk versus reward, and a break even of $17.75.